Hello, welcome back to Business Consultant. Today we have brought you another financial model. This one is Recruitment Agency Excel financial model. It is forecasted up to 60 months of assumptions. It includes the revenue forecast streams as well as the cost of goods sold and other expenses. Coming towards the how to use, as you can see over here, the peach cell indicates the input cells, whereas the gray cells shows the formula result, and the light gray font are the helping cells. The input sheet shows the assumptions which are being used in this model. It includes the starting input, which gives you the company start date and operating date. It also includes the funding assumptions, which are the equity financing and debt financing calculations. It also includes the revenue and cost assumptions, as you can see over here. It shows all the relevant information. Then comes the marketing budget assumptions and customer assumptions. As you can see over here, these all calculations are being used for calculations. Then comes the capital, capex and opex assumptions. As you can see over here, this shows the monthly operating expenses and the capital expenses of the business, as well as few other expenses. Then comes the working capital assumptions. Then comes the revenue analysis. The revenue analysis sheet basically gives you all the information on the business revenue streams, how they are generating their revenue. As you can see over here, it is being calculated. It also gives you the total cost of service or cost of goods sold. Then comes the budgeting sheet, marketing budget sheet. This basically gives you the calculations on the marketing expense of the business in the upcoming 60 months. As you can see over here, it goes up to 60 months. Then comes the startup summary. The startup summary gives you the summary on the total fundings, the total expenses of the business in the first year. It also shows the assets, total assets and total liabilities and equity of the business in the first year. Then comes the financial statements. This includes the income statement. The income statement shows the net income generated by the business, whereas the cash flow statement shows the total um, cash inflows and outflows of the business through its operating activities, investing activities, and financing activities. As you can see over here, this all information is going up to 60 months and 5 years. As you can see over here, it's going up to 60 months. Then comes the balance sheet. The balance sheet gives you the total assets and compares them with the total liabilities and equity of the business, as you can see over here. And it also shows the uh, balance check as the if the balance sheet is balanced or not. Then comes the financial analysis. The financial analysis basically gives you the break-even analysis, which tells you about the break-even sales. Then comes the company valuation, which gives you the WACC, weighted average cost of capital. Also, the expected equity percentage that can be offered to the investors. Then comes the sensitivity analysis. This shows three different scenarios and calculates the functioning of the business in these three different scenarios. As you can see, these are optimistic, pessimistic, and actual. Then comes the KPIs and ratios. This shows you the profitability ratio, liquidity ratio, solvency ratio, and efficiency ratios. So the business decisions can be easily made and know if the business is worth what the business is worth. Then comes the CAC and CLV analysis. This gives you the customer acquisition cost and customer lifetime value and gives a ratio on that. Then comes the working sheet. The working sheet, as you can see over here, gives you different calculations which are being used in the previous sheets. This includes the employee payroll, operating expenses, depreciation schedule, loan schedule, and working capital calculations going up to 60 months. Lastly, comes the dashboard. This shows the calculations of the business in graphical context, all the forecasted assumption in graphical context. It helps in making the decisions much easily and quickly as possible. That's it. This is the end of the video. Thank you for watching.